Lighting's a little weird today. Sun setting, and I think those are clouds, and they actually might be pollen. So if I sound a bit stuffy, that's why. But we're almost through the allergy season here. Now, let's talk applied digital, where it's taking a run today. It's still up about 4%. We made two trades this morning. One was on Big Bear AI, which were up about $160 profit, and then Tesla was the other one that we had about $100 profit. And you guys did it. We had 100 likes on our last video earlier today. And as promised, I'm reopening the virtual stock trading system for a limited time. It's the first link in the description to lock in your spot. Now, let's break down what's pushing APLD higher and what this move could signal. The first thing we see is that it's starting to really validate this overall uptrend. We've been identifying it really for the past few months. It's been holding it for the past few years. But this level at which it's been bouncing is about $3.30. At one point earlier this year, we saw it surge to $12 a share, which in that run was about a 283% increase. And as AI has started to catch on, they're a data center company that builds data centers, and they're backed by Nvidia. So it made sense. They're starting to get some more traction. But then they sold off pretty aggressively, down from $12.50 down to not $12, but $3.25. And then now they're starting to recover. They pushed back above this EMA. They validated that rising support, and they just recently broke out above this very strong support and resistance level that, as we know, previous resistance here and support really is acting as a resistance, and they were able to break out today, up about 4%, leading the AI market. So overall, they're in a market that's growing pretty significantly. Data centers are the backbone of what's going to be the future of AI. And the more that AI progresses, whether it's ChatGPT or robotics or could be Nvidia's massive empire, it's all based on energy usage and energy usage that's needed for data centers. And the data center world is, maybe not, you have your big players like Nvidia, but you don't have your big builders. What are the number one companies that build data centers? Well, APLD is in that growing market, and they are one of the companies that is building the data centers. So from a news perspective, they aren't doing just traditional data centers where it's just only on non-renewable sources. They're really focusing on scalability and placing their data centers strategically near renewable energy sources. They also use things like advanced liquid cooling for superior efficiency and performance. And they have some really, really solid constructions that have happened with over 480 megawatts constructed in 18 months. And they have 400 megawatts in active construction right now. 1.4 gigawatts of future site pipeline right now. Contracts that they have, they're backed by Nvidia, and they're getting some good investors. You got Macquarie to invest up to $5 billion in applied digital AI data centers. And when it comes to their company, they're doing pretty well there. The news, and you can also look at what it is that they offer. They have some of their leadership outlined here. Their chairman, their CEO here, Wes Cummins, is the chairman and CEO of Applied Digital, 20 years of experience as a technology investor. So he's more maybe on the financial side, and he's led technology companies, capital groups in technology, hardware, and software. So maybe on the financial side. And then you bring in Jason Zhang here, which is strategy officer. He focuses also on financial, but they also focus on he used to be an analyst at Sequoia Capital. And so focusing on AI, blockchain, and digital infrastructure. There's quite a few financial people, right? So you have the chief financial officer, then you got the chief operating officer, chief marketing officer. It looks like this guy here, Todd Gale, is more of the development. So focusing on, he was vice president of engineering at Flexential, where he led the design and implementation of new data centers and capacity upgrades. So he's got a lot of material science, technology, and technical background, and most likely someone's going to help with the development. And then you have a lot of it is compliance as well. So you got compliance, you got external affairs. So maybe that's building, you know, building or having other companies that we host, or that they host in the US that are from outside. If they're using a large amount of energy or things like that, there's going to be maybe some conflicts and initiatives. And overall, I've looked at their team a few times. They feel pretty solid. The only thing I would say is that they're pretty finance heavy, which is good. But at the same time, to look at some of their developments, we'd like to see more of the development side as well. But it looks like maybe they don't focus specifically in the actual building. Maybe they do subcontractors, but that they have partnerships with Intel, Hewlett Packard, so HP. They got Supermicro Computer, which Supermicro provides the building materials for xAI from Elon's company, and also for Nvidia. Then you got Nvidia as well, and then Dell Technologies. So they're really working with the top tech companies to make data centers easier for them. And they haven't had a lot of big news recently. They did just report their earnings, though. And in their recent earnings, they had this come out here. Let's take a look at what their stock came out with. So from a financial standpoint, right, they're data centers. But from a financial standpoint, they're bringing in about $50 to $60 million in revenue per quarter. However, the thing that doesn't look so hot about their financials is their net income. It's up 42% year over year, which is quite nice, but it's still negative there, about negative 36 million in the quarter. Previous quarter was negative 139, negative 4. And so while their revenue is increasing and it's up 22% year over year, and their profit margins are increasing, their profit margins are still negative, which is fine. That's okay. But at the same time, you would like to see more positive revenues from a company that has a market cap of about 1.5 billion. So they kind of are a little lackluster, at least on the value standpoint of what we're seeing from the financial perspective. Do they look good in the market? Yes. Do they look good in the partnerships they have? Yeah. And the amount of money that's going into building the data centers that they work with, yeah, there's like hundreds of millions of dollars going into a lot of the data centers. And some of that news coming out later in the year that might not really show up in Q1 in their last earnings. So it's possible that they start to see even more of a revenue growth, and that's when they really start to amp up. But right now, financials look okay. So you get back into the stock, we're seeing it break above this $6 range. Now it looks a little overextended, right? Overall, maybe if it's going to continue up into this level, it's quite favorable. And when it makes that move, sometimes it goes straight up. But we do see on the RSI, the MACD, it looks very overbought at the moment. It hasn't had a red day in a few days. You can see it's been consistently green here from $3 up to about $6. So we'll see. If it continues the run, the level to watch for support is about $6 here, as we pointed out a couple days ago. And if it really holds that level, which we're looking for that hold, that would be most likely where I would have a stop, right? A stop loss of some sort. And then the type of profits we'd be looking for would be to get back into this resistance range, somewhere in this level of around $9.50. It's about a 40% increase. And then if you really get up to that resistance where it's previously gotten rejected and where it's trending, it's about an 84% increase. But right now, to me, the risk just looks a little bit heavier on the near term. Long term looks fairly good. The financials do stand to be something that I'm looking for improvement in. But when it comes down to the near term, I would say it's not looking as good. A little overextended. I could expect a pullback here on APLD, and we'll have to monitor it closely. So when it comes down to APLD, the stock is in data centers. It's in AI. We focus specifically on quantum AI and space stocks, as well as the different nuclear companies or companies that are in defense, like Big Bear or the baby Palantirs, the smaller competitors of SpaceX like Rocket Lab. So we'd love to cover those stocks. And we're also running, and we just opened up our virtual stock trading system again after closing it. There was an outpouring of requests from you guys to be able to join in on our weekly calls. So we got it opened up here, and you can see a few things included. You got the Mercatus beta access. This is predictive analysis for stocks. So future predictive analysis, as well as visualizing markets. And I can actually even show you kind of how it looks, right? So we have this as a bonus for free that you get when you join StockMate. So you could see some of these visualizations of companies. If we go to Quantum over here, we could see how companies are connected and where they're connected. We can go into the companies here like IonQ, see the current price, and we can see future charts for the projections of where these stocks are going. And these projections are based on millions of data points that are real time from AI. And the goal is not to be 100% accurate. Of course, there's trading and investing with a plan and all that stuff. But the goal is to be able to plug in the most efficient and cutting edge AI models and interchange them for you, and have the real-time millions of data points feeding into those AIs to get you the best projections for example, what's going to be considered all of the analysis that goes into the next day or the next month or the next year, and being able to visualize where these stocks can go in that time frame of the future is what this app is based on. So I would love for you guys to get access to beta. It's included in the first link down below. And then on top of that, you also get access to the virtual stock trading system. So we just reopened it, right? The offer is going to be closing soon. Some of you guys saw that we closed it. It's because you get a one-on-one call with me. There is, some supply. I don't have all the time in the world. So that's why we had to close it. But we were able to open it up for a limited time here because we have just a few spots left, and some people are saying we'll have to get into this. And I said, guys, if we get 100 likes on our recent video here that we just posted, I think it was earlier today, right? So we just posted a video here on Big Bear, and we said if it gets 100 likes, and it's at around, well, I think it's about 200 likes. So you guys got that through. You get the bonus of 6 weeks of Zooms in our investor group. The special part about this that a lot of people don't realize with the predictive analysis software is that this isn't available to the public. You're going to get early beta access. You get the one-on-one with me, and then you also get a 1-year membership to StockMate to access daily live sessions. If you're already in StockMate, you did receive an exclusive discount in your email, so make sure to check that out. You also get our books. You get the StockMate community included, and I'm excited for you guys to visualize your advantage with our all-new predictive AI. Isn't that exciting? I'm pumped. All right, so again, it's that first link down below. If I earned your thumbs up, hit that like button, guys. Do consider subscribing if I earned it, and I'll see you guys in the next video. Take care.